U.S. government is clearly escalating its efforts to kneecap China's AI ambitions. We've already seen licensing requirements slam NVIDIA, $10.5 billion in lost sales just in the first half of the year, and AMD's advanced AI chip exports all to China. But today's move targeting design software shows Washington realizes that just blocking finished chips isn't enough. The real concern is that China's homegrown players like Huawei keep making progress with their own advanced chips despite the restrictions. And so that's why you're having the chip and hardware world caught in the middle of this geopolitical dialogue between both countries.
Can we talk very quickly about, it's a heck of a story. Let's talk very quickly about NVIDIA. I mean, NVIDIA is not soaring, but the stock is higher. The numbers last night, I know Jensen Huang has expressed some concerns. He talked about it with Jim last night on Mad. But overall, NVIDIA is having a pretty good day. I think on most days, Christina, this would have been our top story.
Yes, and that's because NVIDIA is having a good day because they were able to show that even with the China export restrictions, which really they wrote off about $4.5 billion in Q1 for inventory losses. They lost $2.5 billion in sales in Q1. They are going to lose $8 billion in sales in Q2. Despite all of that, the company still said that they are selling Blackwell and ramping up at a record pace. It's about 70% of their data center sales. Blackwell's their latest iteration. So things are doing really good outside of China. And so that's the positive that they're de-risking China right now. And that's why you're seeing the stock move a little bit higher, about 3%.
Even though things are a little trickier this time, NVIDIA is going above and beyond expectations. Despite major obstacles from U.S. export restrictions on its H20 processors to China and other geopolitical worries, NVIDIA's excellent first-quarter headline results demonstrate that its AI thesis is as strong as ever and that its margins remain superior. The $3.3 trillion chipmaker announced a $18.78 billion profit after the bell on Wednesday, with $44.1 billion in revenue for the fiscal first quarter, up 69% from the same period last year. An increase in revenue to $43.26 billion was predicted by analysts. The company's gross margins were impacted by the H20 limits, which resulted in a $2.5 billion revenue deficit and a $4.5 billion write-down associated with excess inventories. The adjusted earnings per share of €81 exceeded the $75 predicted by Wall Street. Non-GAAP diluted profits per share for the first quarter would have been $0.96 if the H20 charge and associated tax impact had not been incurred. Investor confidence, despite conflicting guidance and ongoing market uncertainty, is reflected in the stock's 25% gain over the past month and its 5% increase in after-hours trading. NVIDIA's performance above expectations, as the market for generative AI infrastructure continues to grow and rivals are finding it difficult to keep up. Wedbush analysts, led by Dan Ives, stated in a note on Tuesday that NVIDIA's results will probably be a big plus for the IT industry, particularly for businesses that have made significant investments in the AI revolution. It was too. In the first quarter, the company's data center sector generated an almost unbelievable $39.1 billion, increasing 73% from the same period last year and 10% from the prior quarter. This indicates that NVIDIA's fastest-growing business unit now accounts for about 89% of total revenue, demonstrating how deeply ingrained its chips are in the development of AI. Analysts anticipated that this division's Q1 revenue would be approximately $37 billion. CEO Jensen Huang stated on a call following the release of the company's earnings that there have been 4 encouraging developments in 2025 thus far: the need for enterprise AI, industrial AI, reasoning AI, and the elimination of the AI diffusion rule. He stated that he believes AI will continue to grow. According to Huang, the demand for AI computers will increase as AI agents become more widely used. In the past year, the generation of AI inference tokens has increased tenfold. NVIDIA is at the forefront of the significant shift as nations all over the world acknowledge AI as vital infrastructure, much like electricity and the internet. "We would like to serve all of it, and I think we're on track to serve most of it," he said, referring to the increasing demand for AI thinking. NVIDIA anticipates Q2 revenue of about $43 billion, which is little less than Q1 numbers. The company also anticipates that gross margins will stay in the low 70% level. NVIDIA anticipates losing almost $8 billion in H20 revenue in the upcoming quarter. Following the results announcement, Larry Tentarelli, chief technical strategist for Blue Chip Daily Trend Report, stated in a note that he is still bullish on NVIDIA and has set a year-end price objective of 165. According to Tenerelli, NVIDIA is still the industry leader in GPUs and the top stock in artificial intelligence. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Right, China was the loud part of the quarter, but Inference may be the quiet and potentially more durable driver of NVIDIA's next trillion. Now, the early AI race, it was all about training models, building the brains. Now that is shifting to using them in the real world, and that's Inference. It's where the next wave of demand is building, and it's what everyone is talking about out here in the Bay Area. It's every time that ChatGPT or Google's Gemini answers a question, or it's what happens when an agent reasons through a task. Behind every response is a stream of tokens. These are small chunks of text that the model reads, processes, and then generates. So the more complex the task, the more tokens it consumes. And it's only getting more compute heavy. New reasoning models, they think through answers step by step, rechecking their work, and that translates into more tokens per query running through NVIDIA's GPUs. Now, we're just starting to see how big that demand is getting. Here's CFO Colette Kress on the call last night.
We are witnessing a sharp jump in inference demand. OpenAI, Microsoft, and Google are seeing a step function leap in token generation. Microsoft processed over 100 trillion tokens in Q1, a five-fold increase on a year-over-year basis.
Last week at Google's I.O., this hockey stick inflection chart, it represents token usage. Gemini, it's now in everyday tools like search and Gmail that touch billions of users. Each prompt or response, that's more inference, more tokens, more demand. And NVIDIA, so far, like it was in training, it is still the dominant player in inference, powering most of the models behind that surge in usage. Others like AMD and Google's TPUs, Cerebras, they're in the mix, but right now, most of those tokens and most of that revenue still runs through NVIDIA. Then there's sovereign AI. We've talked about it, another leg of that demand, maybe even helping to make up for the China gap, guys. So inference is where it's at, maybe less talked about perhaps in China.
No, you flagged it, heard about it. Analysts are writing about it, the sovereign AI story, and how that's a big tailwind. Thank you, Deirdre.
A significant portion of NVIDIA's revenue has historically come from the Chinese market, but this has drastically shifted in the aftermath of stricter U.S. export regulations and tariffs. Additionally, the market is keeping a close eye on NVIDIA. Whether China will have AI is not the topic at hand. It does already. According to Huang, the question is whether one of the newest AI markets in the world will operate on American platforms. Instead of sending half of the world's AI talent to competitors, export restrictions should bolster American platforms. NVIDIA is working on research and development projects in Shanghai and creating reduced chips tailored to China that adhere to existing regulations in order to keep its market share. The company is at the center of the U.S.-China tech competition. Its GPUs may be the most lucrative parts of the AI arms race, and policy, not just engineering, is increasingly determining its position. The president has a vision and a plan, and I appreciate that, Huang added. We anticipate a significant decline in data center revenue from China in Q2, said Colette Kress, chief financial officer at NVIDIA. Losing access to the China AI accelerator market, which we estimate could reach about $50 billion, would significantly harm our company's future operations and give our international rivals in China and around the world an advantage. According to Huang, onshore AI production in the United States has a promising future because the company wants to create everything from chips to supercomputers in the country within a year. Additionally, the business has more plans. Later this quarter, Kress added, the company's Blackwell Ultra AI server will begin shipping. I've stated in a post-earnings release statement on Wednesday that NVIDIA and the godfather of AI, Jensen Huang, delivered another strong quarter after the bell, with the entire world and markets watching. China, Taiwan, and Saudi Arabia have all been on the CEO's global trip, which will continue in the upcoming weeks as he travels to Europe. According to Huang, almost all nations must develop their AI infrastructure. In addition, the company reported record revenue of $3.8 billion for the quarter, up 48% from the previous quarter, in its gaming division, which is the foundation of NVIDIA. Additionally, despite a 1% decline, NVIDIA's vehicle revenue is climbing 72% year over year due to a growing demand for self-driving cars. In 14 of the last 16 quarters, NVIDIA has exceeded analysts' earnings projections. Can anything, therefore, slow down NVIDIA? Perhaps. The competition is getting more intense. While hyperscalers continue to invest in custom silicon, AMD and Intel are refining their AI chip offerings. Furthermore, export limitations continue to be a geopolitical wildcard. Nevertheless, NVIDIA has a large moat, as seen by the first quarter earnings. It is more than just a chip maker because to its software ecosystem, close ties with cloud providers, and consistent product releases, it is a platform firm for the AI future. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
So much. So what do you think is going on today? We're starting to hear more about China reneging on the trade deal. Surprise, surprise. So what are your thoughts?
You know what? It's been a real look. We could talk of the month, but the month has just been insane, right?
Incredible,
We
right?
went from
Good
those
month.
lows of April, and we rallied back, and we got back so much of that loss, which is wonderful.
Yeah.
And then we had the downgrade, which did not seem that significant at the time. It was a short-lived thing. Let's remember that Moody's is the agency that downgraded that gave Lehman Brothers a AAA rating 2 days before the crash of 2008. So let's not put a lot of onus on Moody's. Next, let's keep moving. And then we saw the EU, and I want to mention the EU because when he imposed, we had sort of a quiet time about tariffs. We didn't mention them. The market was sort of sideways, didn't know what the next move was. Then he decided to impose a 50% on the EU. What I think is significant is the president of the EU finally was the first person who has learned how to deal with Mr. Trump, which was perfectly handled. She immediately got on the phone, called him and said, we're ready to make a deal.
Right.
We need a little more time. Can you give it to us? He said, thank you for the call. I'll give you to July 9th and we'll make a deal. The market rebounded immediately, and I was like, oh my God, finally someone figured out how to
speak to Trump, how to get
he felt respected, he felt heard. It was about a deal, it was some certainty, and I was just really impressed with that.
So that's good. That is good. Were you impressed with NVIDIA?
Super impressed with NVIDIA. It was a double beat, right? Even thinking about the $8 billion that is sort of lost in the wash there, which was potentially, what's curious is this. I'm not sure why the president is going after NVIDIA on that, because NVIDIA is being forced to give up $8 billion of business to Huawei, right? Like, NVIDIA is an American company. Why would we be doing that and think that that's a good idea? But anyway, that was a little tidbit from Dan Ives. Net, even taking into account that potential charge of $8 billion, they still blew it out of the water on earnings, on revenues, and going forward, it looks like a gold mine. Now, relative to the China story, I was just wondering what would be the next shoe to fall. Look, where do we go with this? Do we know what exactly happened? We still don't really know. I mean, when he announced the deal with China, we never got any particulars about it, so we don't know what's in place. We do know we went from 185 to 145 to 80 to 70 to 30 on the tariffs, and things got better. What are they actually reneging on? We don't really know. So there's uncertainty. Is the market engaging it in a big way? Not that much. I kind of think that the investment community is a little bit jaded or a little bit distrusting about they're not emotionally responding like they did a month ago or 2 months ago with every tweet and every comment about China, about tariffs, right? We're not getting those huge thrusts up and thrusts down in the market. I think people are just trying to stabilize, and they're patient, right? They're not reacting. We know we don't want to really harp on what the taco trade, which came out yesterday and which upset him. In all due respect, it was
Trump
not
always chickens out.
Right,
That's what it stands
I don't agree with the comment, to be honest, because it is a negotiating tactic.
Right.
The way he does things, and it has worked in a number of cases. I'm not all for it, but I'm not totally against it. So I like to give credit where credit is due. But we don't know what does it mean with China today? Is the market really responding that? No, we're kind of flat. So the market tells us what it thinks of it, not much.
Right, and indeed. I'm seeing Palantir running hot, folks, on the heels that President Trump has selected Palantir to compile data on Americans. And this morning, it's now moving to the highest point of the day. So there's some news there on that. I mean, what's your look ahead now for summer? Oh, we have 10 seconds left.
Oh my God!
What do you think?
You know what? Look,
Good,
I'm
bad, or ugly?
I'm loving tech. I think it's really a day at a time. I'm having a lot more confidence in the market than I did a little while ago.
Yeah.
I'm a cup half full guy. I'm a forever bull, and I think we're going to be all right.
In China, NVIDIA is still doing a careful dance. In order to keep its grip on one of its most significant markets without going through Washington, the $3.3 trillion chip giant is once again redesigning its product line in the face of U.S. export limitations on its cutting-edge AI chips. The business is getting ready to sell a simplified version of its well-liked Blackwell AI chips that have been specially made to adhere to U.S. export regulations, according to Reuters, which cited anonymous persons with knowledge of the situation. Days before NVIDIA is set to announce its first quarter 2025 profits, the news was announced. According to reports, the China-only Blackwell-based processor will cost between $6,000 and $8,000 and use standard GDDR7 memory, which is a step down from the high-bandwidth technology found in NVIDIA's flagship models. Prior to this, the nation's H20 chips ranged in price from $10,000 to $12,000. Taiwan Semiconductor Manufacturing Company's packaging technology would also be abandoned in this upcoming chip. According to an NVIDIA representative who talked to Reuters, the company is considering its limited options. We are essentially shut out of China's $50 billion data center business until we decide on a new product design and get the go-ahead from the U.S. government. NVIDIA has experience with regulations. The business reacted with diluted versions in 2022 when the United States banned semiconductor exports to China. NVIDIA created chips with even lower performance to meet requirements once those were caught up in limits in late 2023, and the regulatory whirlpool has persisted. After the U.S. government took action to prevent the company's H20 AI processors from being exported to China, NVIDIA was hit with a $5.5 billion charge in April. NVIDIA is now hoping that this chip type, which is unique to China, will be successful. Jensen Huang, the CEO, has expressed his displeasure with U.S. policy more and more. He referred to the export restrictions as a failure at a gathering earlier this month, claiming that they have merely expedited China's efforts to produce its own AI hardware while excluding American companies from the process. In the ongoing trade war between the United States and China, technology has emerged as the new front. Chinese telecom behemoth Huawei is gaining headway with its AI processors, which are rapidly emerging as the go-to option for Chinese IT companies as a result of NVIDIA's export restrictions. According to reports, since 2022, NVIDIA's market share in China has decreased from 90% to about 50%. However, with 13% of its revenue in the most recent fiscal year, China continues to be a big market for NVIDIA. Even though Huawei is losing market share, this new processor should help the company stay competitive abroad because NVIDIA is still seen as superior. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
So tell me a little bit about what you mean by this. You've said that 90% of what we see in terms of the market today driven by passive funds, fast trading, derivatives, and that public companies and many investors are missing this, how much market structure dominates price movement. What do you mean by that?
Well done, Diane. Nice to see you. Happy Friday to you. My favorite topic is market structure. Of course, at a cocktail party, if you want to clear a room, start talking about this. But what we mean by market structure, and you framed it well, it is the plumbing, it's the mechanics, behaviors, regulations of the market, and it sounds very boring, but it's central to success as a trader. You know, you can look at any of those stocks that the previous segment addressed, and look at it from a market structure standpoint to try to understand demand and supply. It can be very helpful, and it's simple. Ultimately, market regulation, and what I'm talking about here is what do you have to do if you're handling an order in the marketplace to get it in one side and out the other side? And that is a complicated process. And to your point about the construction of volume, 90% of the market's volume is something other than what we all tend to spend our time focused on, which is what are the fundamentals of the business? is NVIDIA going to beat consensus or its expectations for the quarter? Well, a very small part of NVIDIA's volume comes from stock picking, about 12%. About 22% of its volume comes from indexes and ETFs and quant funds and so on. It's in over 800 ETFs. About 50% of the volume is just short-term trading. It's Citadel, Jane Street, Hudson River trading. 20% of its volume comes from trades tied to derivatives. And these things matter. They have a great effect on price, performance. It's predictive. It can tell you whether you're going to be at risk as a trader.
So how much do fundamentals matter now? Do they matter?
Well, they matter, Diane. It always matters whether you run a great business. Take the S&P 500. It's about 90% of market cap, believe it or not. It's close to 90% of volume. And to be part of it, you have to deliver profits in the last 12 months. Last 4 quarters, you're going to have profits. So it's a very easy way for fundamentals to matter. But if you expect stocks as a trader or an investor, and you're spending time studying data, and you're looking at the fundamental performance of a business, that it may or may not do what Warren Buffett and Benjamin Graham would have looked at things and expected from them today because of market structure. The market it's 100% electronic, it's 99% algorithmic. All the markets are connected. Half the volume occurs at the exchanges. That's called lit volume. Half of it occurs in the dark. A lot of the volume is merely arbitrage between an underlying basket of equities, an ETF or a bunch of ETFs. There are 3,800 ETFs traded in the US market that are trying to track equities. 1,900 of those are tied to equities. There are derivatives that are associated with those that also have to track the performance of the ETFs and the basket. And a lot of volume revolves around that process. So that degrades the value of fundamentals. And you're right, public companies should think about this. We have every quarter a bunch of companies reporting results, and they think that that's going to be the driver, and oftentimes it's not.
So then let's talk about the drivers coming up in June, right? Where today is the last trading day of the month. We've had a strong May, I think stronger than many anticipated. So what should we be paying attention to, and what's going to move the needle in terms of market events in June?
Great question. So today is month-end options expirations, and it relates to a set of index options expirations, particularly for the S&P 500. And it matters. It was created in 2014. The SIBO created this series to respond to the growth of index investing. And if you're running an index fund and you have a weighting that you set in your prospectus that we do the following things, and you get to the end of the month and your weightings and the expectation of your tracking relative to that index are out of alignment, you're going to need to realign it. And rather than buy little bits and pieces of everything, these big funds, trillions of dollars, will engage a bank to true them up. And if we had a lot of volatility, May's been great, but are people overweight? Did they overpay for those baskets of options and futures when they set them at the end of April? We don't know, but we'll find out. And it's very important for traders to understand the cadence and calendar of the market. These things can have a dramatic effect. If you go back and look at May 21, why did the Dow drop 800 points? Well, you could come up with your own reason, but VIX options expired that day. We could look at the data and say that people probably overpaid for volatility hedges because volatility went away, and then you see that effect. If you don't need that insurance policy, it can affect the market. There are things occurring in June, too, that people should be aware of. There will be a Fed meeting, June 18, right into quad witching, index and options, or index and stock options and futures expiring. And it's not one day, it's about 5 days. They reset on the following Monday. There are Russell rebalances. The last time that they will be annual, from here on they'll be semi-annual. There are quarterly S&P rebalances. So coming out of this period where we've had really unprecedented volatility in the quarter, are there going to be changes? Well, as a trader or an investor, you need to be aware of those things.
Okay.